First up, positive economic news coming out of China. A private survey showed factory activity expanded at its fastest pace in 13 months and business confidence hitting an 11-month high. The Caixin Manufacturing Purchasing Managers Index rose to a touch over 51 in March from 50.9 the month before. Anything above 50 shows growth. That finding joins an official PMI survey released on Sunday that showed China's factory activity expanded for the first time in 6 months. And new export orders were at their highest level since February of last year, according to Caixin. Well, for more on China's economy, we're joined by Yukon Huang. He's a senior fellow in the Asia program at the Carnegie Endowment for International Peace. Welcome, Yukon.
Thank you.
Now, first up, what's your initial take on the latest factory output data coming out of China?
Well, as you mentioned, it's a good sign that the economy is starting to turn around. You're waiting for the U.S. and Europe to continue buying a lot more from China. They bought a lot during the pandemic, slowed down the last couple of months, but now seem to be reviving. So that's a good sign. There's a major concern in China about whether Western investment in China will continue to be at the similar levels in the past. There was a significant slowdown in the first couple of months. Everyone's hoping there's going to be a rebound.
And to that point, China did just release its latest foreign direct investment numbers into China, and it's fallen to a 23-year low. Is this a sign of things to come, or do you think they'll improve?
Well, I think that this is a bit misleading. The foreign investment numbers are a mixture between what I would call short-term portfolio money going into bond markets and equity markets, and that has fallen dramatically. And the reason it's fallen dramatically is because of higher interest rates in the West and also exchange rate fluctuations, which have depressed the value of the renminbi, making it discouraging investors from putting more money into China for fear that the renminbi value will fall. But the longer-term consequences are really what I call, as you mentioned, foreign direct investment. Money going into manufacturing, services, betting on the long-term revival of Chinese economy, and the upturn in the economy in the last couple of months is a hopeful sign. I think a key issue in the future is going to be actually less in manufacturing, but more in services. China is becoming a more domestically driven economy. That is, manufacturing as a share of GDP will not grow as rapidly as services. So a big issue in the future is the nature of China's service economy and the interest of foreigners, Western and European investors, in China's service sector. And China could do a lot to encourage more investment in services.
Now, Yukon, just returning us back to China's factory output data, tell us how significant do you think it is in terms of understanding the health of the global economy?
Well, the global economy is projected to decline a little bit this year, but it's hard to tell. A lot depends upon what's going on in the Middle East, the Ukrainian war. There's still a continued big stimulus program in the United States, but Europe is having a lot of difficulties. So you put that all together and have a lot of uncertainty. But I don't think China can count on a major increase in demand in the West because of all these issues. It's going to have to rely upon what's more going on in China. So the big issue in China is, can the property bubble be reversed? Can the domestic consumption be stimulated? Can they revive longer-term growth? Is the investment in innovative green technologies going to be able to turn the economy around? There's a lot of uncertainties, but at least for the moment, last month's indicators are a positive sign.
And in terms of China's domestic market and focusing down on manufacturing in particular, what sectors in that regard are driving recent growth, would you say?
Well, the government money, the state-supported money is going into innovative activities, but that's really actually a relatively small share of the economy. You're really looking at things like consumption of basic goods, travel, transportation, a revival of investment, which is not property driven. There's a lot of excess capacity in China at this moment in time. And until that excess capacity is being used up, there's a lot of discouragement in terms of foreign investment. So you really have to look for maybe a couple more months of information before we can firmly say whether domestic investment is actually going to intensify.
And with regard to that, in terms of a slump, we've seen that in the real estate sector, of course, which is still trying to recover. How do you think the government is actually managing that? Is there pressure still on the economy, or is there a way through here?
Well, the government hasn't been willing or inclined to pour a lot of money to revive the property sector, and there's good reason for that. They're waiting and hoping that the sector will somehow revive itself. But there are some small signs that the sales are increasing, that the bottom has been hit, and there will be a slow revival. But nevertheless, reviving the property market is going to take a year or two. It's not going to be a quick fix. So finding a quick fix in China is not the issue. The issue is how do you create a sustainable growth in the longer term? And that's going to take, I think, a lot more time before we know what the outcome will be.
And expounding on that just briefly for me, how do you see China's economy performing further into the year?
Well, this year's goal was to achieve a growth rate of 5%. And that will be challenging. Last year they got 5%, but this year's growth is going to be on a stronger base. So the question will be, well, can they get 5% again? For that to happen, I think you're going to have to see a rebound in investment at the local levels. You're going to have to see the property market stabilize itself. You're going to have to see a little bit of revival in the global trade. Global trade last year was not helpful to China. So there's a lot of uncertainty in the situation. And so I think what you're going to see is until maybe the second half of this year, you're not going to be able to tell whether that 5% target is going to be realized or not.